Welcome to the trade. And before we get into the charts, let's take a look at what traders are watching. Amazon posting sales in last year's final quarter that topped estimates, but investors initially drove the shares down in aftermarket trade due to weakness in the cloud computing unit and a lower than expected revenue estimate. Elsewhere, the US Treasury Department has agreed not to give Elon Musk's government efficiency agency access to its payment system, while the judge hears arguments in a lawsuit alleging the billionaire advisor to President Trump illegally searched them. A US judge on Thursday temporarily blocked the Trump administration's proposed buyout for federal workers until at least Monday, giving an initial win to labour unions that sued to stop it. And the Bank of Japan is increasingly blaming chronic labour shortages, not stagnant demand, as the main reason for its weak economic activity, a justification it may use to lift interest rates beyond what was initially expected, and that has boosted the yen. Let's now get across what we're seeing on the technicals with a focus on commodities and currencies. And to do that, I caught up with Richard Weissman from Weissman Consulting.
I thought this was an interesting time to revisit currencies. In past broadcasts, I was focusing on dollar strength, specifically vis-a-vis the Aussie. And I'm starting to see a little bit of a change in tone. Everything else is kind of in mid waters, but it looks like the dollar is weakening significantly against the yen. And it's too early to tell for sure as to what the reason is, but maybe a flight to safety, a flight to quality. Maybe things aren't as great as everyone thinks they are, and it's starting to show up specifically here in the dollar against the yen. We saw that we broke some support. Obviously, we've got a ways to go until we get to our next significant support level, which I'm showing at 148.50 area. And we might move quickly to that level. A much more serious level for us is 139.50. If we take that out, we could really have a major trend on our hands.
Yeah, fundamentally, Richard, we've also had news from another policymaker for the Bank of Japan indicating wanting to lift rates again. Clearly, that's supportive as well for the yen.
Absolutely, yeah. So there's some fundamentals coming out of Japan, and I just have a feeling that that flight to safety, flight to quality trade might be behind the scenes as well, feeding the frenzy.
Okay, so that's what we're seeing on currencies. Let's now move into commodities, specifically precious metals. Now, of course, the story has been all about gold, going from record to record. Just in the most recent session, though, saw some profit taking there. Gold did fall back. What, though, are we seeing with silver?
Yeah, so gold is definitely the leader and very exciting. It's again, maybe that flight to quality, flight to safety. Silver has been lagging. And as a result, I thought it might be interesting to look at the laggard, especially as bull markets in precious metals mature, later stage bull markets in metals. Silver tends to play catch up, and then in the very late stages tends to be the leader. If history is any guide, every bull market's different, obviously. But our next level, this is a clear uptrend. You can see the uptrend line there. The next serious level of resistance that I'm looking at is $35 a barrel. It's not that far away. And way, way above there is the $50 record highs. If we get beyond that, you could see some real frothiness and that kind of buy at any price mentality. I feel that that is a definite possibility and something for us to watch for in 2025.
We can't go to the gold chart, but Richard, what are you seeing with gold at the moment, given we have made those recent records?
Yeah, so it has been the leader without question all the way up. When you're at record highs, it's very hard to forecast where a top comes in. And that's why I wanted to show the viewers the silver chart. Maybe that's the way to get a handle on when gold tops out. See how it reacts at $50, wherever gold is at that level. Maybe it's time to lighten up, and certainly time to get more aggressive in stop placement.
All right, Richard, now let's focus on oil. Now, we have heard from Donald Trump, of course. He's only been in the White House for 2 weeks, but look, he said he wants oil prices to fall. He appears to be getting his way.
Yeah, and I think it's indicative of the drill baby drill mentality that the leader in this down move that we've seen since he entered the White House has been the North American marker, West Texas Intermediate, and that's what we're showing in the chart. Broke the uptrend line that had been in place in December, early January, and we are still dropping. Interestingly enough, the refined products were up today, and oil still went down. So it shows you it's a real upstream phenomena, and it does seem like the producers, the E&Ps in North America, are responding to that policy shift of drill, baby, drill. Logical levels there. You can see on the chart, I'm showing a call out at $66 a barrel. That's basis the March futures. And below there, you can kind of eyeball, it's around $64 a barrel.
Yeah, so once again, fundamentally at least, we know what we've heard from Donald Trump, but I mean, it appears that producers are opening the taps at the moment, raising that US oil production.
Absolutely. And, at these levels, there's really no reason for them to stop. Once you get down into the 50s, some of the wells in the Permian Basin, maybe they, shut in. Certainly below in the 40s, below 40, you're going to have some shut-ins, but at these prices, they're still making money. So.
Richard Weissman from Weissman Consulting with his view of the charts, and that is the trade for this Friday.